Today we are talking about one of the most surprising business stories in a long time. It's about how a nostalgic mall brand, the one that lets you stuff your own teddy bears, pulled off a truly incredible turnaround. This is a story about smarts, strategy, and really understanding what your customers love.
Okay, so this might sound a little out there, but what if I told you that, for a while, a company that sells customizable stuffed animals was actually outperforming some of the biggest names in tech? I know, it's a wild thought, and it really sets the stage for this comeback story.
And just look at this. This chart really puts it all into perspective. I mean, you have tech giants like Nvidia and Microsoft seeing incredible growth, but Build-A-Bear's stock performance since late 2020, at one point, it was just leaving them in the dust. The numbers are absolutely staggering.
Yeah, let that sink in for a second. Over 1,150% growth in its share price. This wasn't just some small recovery, okay? This was a full-blown revival that pretty much caught Wall Street completely off guard. But to really get how they got here, we have to go back to when things were looking, well, pretty bleak.
See, before this massive stock surge, Build-A-Bear was a brand in deep, deep trouble. They were this pioneer of in-store experiences, but it really seemed like they were destined to become just another fond memory of a time gone by.
And it's easy to forget they were way ahead of their time. Back in 1997, they basically invented what we now call experiential retail. You weren't just grabbing a toy off a shelf. Nope, you were a part of making it. From picking the skin, to the stuffing, to that little heart ceremony, that whole experience was their secret sauce. But, that magic couldn't last forever. The 2008 financial crisis hit, and all of a sudden, their biggest strength, being in shopping malls, became a huge weakness as people just stopped going. By 2012, they were losing tens of millions of dollars, and by early 2020, the stock was trading for less than $1. So, to put it simply, the whole business model was broken. They were way too dependent on dying malls, they were super late to the whole online shopping game, and get this, a fifth of their stores were actively losing money. The company was basically bleeding out, and it needed a huge change fast.
And that change came in the form of a new CEO, Sharon Price John. She's a toy industry veteran who took over in 2013. And she had a massive challenge ahead of her, but she came in with a really clear diagnosis of what was actually wrong.
This quote from her really gets to the heart of the entire strategy. Her big insight was this: people still love Build-A-Bear. That feeling, the nostalgia, the experience, that was all still there. The problem wasn't the brand itself, it was the old, outdated business that was wrapped around it.
So her playbook was basically a three-step plan. First, fix the store locations. Second, start selling to more than just kids. And third, finally get serious about their website and their digital presence.
So step one was a total real estate overhaul. They started closing down those money-losing mall stores and opened up new ones in places with tons of foot traffic. Think tourist spots, theme parks. It was a crucial move. Instead of waiting for customers to find you in a dead mall, you go where they're already having a good time.
All right, step two was all about who they were selling to. And this is where things get really interesting. Back in 2013, kids were 80% of their business. Today, adults make up a whopping 40%. They literally doubled their adult customer base. So, how on earth did they do that?
Well, they did it by tapping into stuff that grown-ups love: pop culture and nostalgia. They started making bears based on things like the musical Wicked. All of a sudden, adults had a reason to go back to Build-A-Bear, not just for their own kids, but for themselves. And finally, step three was a huge digital push. They built a mobile-first website, rolled out virtual workshops, and launched a loyalty program. This wasn't just about playing catch-up. It was about using technology to build a stronger relationship with that new, high-value adult audience they just discovered. And the result of all this? A complete transformation. I mean, they went from being a struggling, kid-focused, mall-based company to a diversified, global brand that appeals to all ages and meets them wherever they are, whether that's a tourist hub in London or just on their phone. The results have been just incredible. The company is hitting record profits. But, of course, the story doesn't end there, because with all this new success comes a whole new set of challenges. So the company is now on track to bring in over $500 million in annual revenue for the first time ever, a number that would have seemed absolutely impossible just a few short years ago. But it is not all smooth sailing. Now they're dealing with the same economic headaches as everyone else. You've got tariffs on goods from China and Vietnam, you've got inflation that's squeezing everybody's wallets, and that's forcing the company to start raising prices on some of their products.
So what's the big takeaway here? What can we really learn from this teddy bear's triumphant return?
Well, it might just give us a peek at the secret sauce for what it takes to succeed in modern retail.
This quote from the company really gets to the heart of their unique power. Build-A-Bear has an unbelievably low rate of product returns. And why? Well, think about it. You don't just buy the bear, you make it. That whole process creates this emotional connection that's almost impossible to break. It's not just some toy, it's your bear. And that really leaves us with this final thought. In an age of fast, faceless online shopping, is this the model for how to survive and thrive? A deep emotional connection to a brand, mixed with a smart, flexible business strategy that isn't afraid to completely reinvent itself. Maybe the future of retail isn't just about what you sell, but about the feeling you create.